So SpaceX has been a household name for the last decade. I mean, they've been a private company for over 25 years now. So a few things are going to change. One, they'll be subject to the reporting requirements of a public company, including quarterly earnings reports. Two, all their shareholders are going to get liquidity. Existing investors and employees are going to be able to trade the stock, and they will be subject to lockup, but eventually they will be able to trade those. Three, the stock will be publicly accessible to unaccredited retail investors on all of the typical exchanges. Four, for private market investors, we lose one of the most actively traded names in the market for the last few years. They've been at the top of Augment's Power 20 for years and the most recognizable name in private markets. So when a private company goes public, first of all of the different classes of private stock will generally convert to common stock. So they're all the same class. And in terms of when existing shareholders can sell, that's outlined by the company in its S1. Typically 3 models. The first model is a direct listing, where shares are freely tradable on the day of the IPO. The second model is a traditional lockup, which is typically shares are locked up for 6 months or 180 days after the IPO. And a third is a hybrid model. And this is a lot less common, but it's growing in popularity. For example, Palantir allowed for 20% of their stock to be freely traded on day one, all of the direct listing model, and the other 80% was locked up for 180 days. SpaceX's schedule is a bit more complicated. SpaceX has also had multiple stock splits during its tenure as a pre-IPO investment opportunity. So investors who invested 10 years ago around $100 a share are actually holding a cost basis of $2, as SpaceX went through a 10-to-1 split a few years ago and a 5-to-1 split prior to the IPO. It's worth confirming your entry point, what that means after the stock splits, and report that to your brokerage firm when shares are delivered so that tax documents are properly prepared. Unfortunately, due to the lockup schedule and process of getting freely tradable shares or cash in your account, the price at the IPO or close of the first day of trading is not where you're able to exit. The price could go up, it could go down, it could stay flat in between the IPO and actually getting your shares. So don't anchor the closing price. There are situations like Figma where the stock price drops prior to the lockup, and situations like Rubrik and Reddit where the stock appreciates significantly prior to the lockup. To get access to SpaceX, if you're a retail investor, so there's a couple of scenarios. First scenario is you can buy IPO shares of SpaceX at the IPO, in which case those shares are immediately freely tradable. You can buy and sell them at your free will on the exchanges. The second scenario is if you already own private shares of SpaceX before the IPO, in which case your shares will probably convert to common shares and will become freely tradable after the lockup period. You're gonna have to read SpaceX's S1 for the full details because their lockup conditions are pretty complicated. One interesting thing about SpaceX is that this is gonna be the biggest IPO in history. And there's been an immense amount of value creation in the last 2 years in the private markets. If you bought SpaceX a year ago, you bought it at a $400 billion valuation. And if you bought it 2 years ago, it was worth $200 billion. So if you bought it 2 years ago, you're up 10x. And the question to investors buying at the IPO is, how much upside is there really on this company?